Well, thank you all for joining us here. And again, obviously, thank you to Jeanette and the team for putting on another awesome event here on a Saturday. As I always like to say, if you are taking time to show up on a Saturday, you are showing serious commitment to learn about the markets. I think that's a really cool that everyone here is showing up. Um, Before we get started, I want to just quickly touch on a little bit what Jeanette just said in terms of crypto. I am sort of an old Wall Street person, not old in terms of the absolute age, but kind of schooled the classic way at at the investment banks and J.P. Morgan and then the buy side and all that kind of stuff. So when a new asset class comes along like crypto, there's always going to be skepticism, and rightly so. We have to be, and I do think there's a lot of stuff that's going to not go well, but some things might go very well. It's like anything new. So before we start, I want to make sure I put that disclaimer out. I'm not one of those, for lack of a better term, a crypto nut where I think everything in crypto is awesome and it's the only thing anyone should ever invest or trade in. Absolutely not. But I do think that technology is ever evolving. Growth stories are inherently technology heavy, and this crypto world, you could even call it blockchain world, whatever. There's many different ways of describing it. It has gained a lot of attention. And one of the things that when Jeanette brought that up, as she said, I don't know if you guys remember or heard what she said a few minutes ago. She said that when she first came to me about crypto a few years ago, I said, hey, no way, at least not yet. And what I've witnessed over the past few years as I've been monitoring is that a lot more institutional investors are coming on board. We're having these discussions ourselves with our institutional investors. And so, there's certainly a lot of real stuff, very real stuff happening. So what we're going to look at today is how we can use a specific tool that we have that is going to allow you to both trade something like crypto and as well as, and maybe more importantly, determine very clearly whether the asset in question, be it a cryptocurrency, a blockchain stock, or any other asset class for that matter, is trending up or down or bearish. So, or sideways, I should say. So this is yours truly. As I said a minute ago, I'm originally more from sort of an investment banking background at JP Morgan, then moved on to the buy side as a portfolio manager. I'm also the head trader, chief investment strategist at thestudytrader.com, as well as a managing partner at Blue Marlin Advisors, which is an RIA, a registered investment advisor. So over the years, as I've been very fortunate to build really good relationships with investors around the world, and that has over the past few years been really interesting to watch how those funds have moved into other areas. And we've noticed more and more institutional investors, either very close friends or people I work with, or even direct clients, moving into and allocating to the crypto markets. And one of the things that the feedback that we have continued to get from people, and ultimately even more so on the retail side, is that, listen, crypto is nice, but it's just too darn volatile. So what we're going to show you today is a tool and a process that we've developed that we're using obviously in-house and also for our clients, where we are able to tell very clearly if a crypto asset is either trending higher, not trending at all, or trending down. And then within those trends, it is going to allow us and actually give us tactical trading opportunities. So whether you want to be tactical on it or you want to just simply ride the trends, it is going to do both. But before we look at all of this, we have to build a little bit of context and perspective around why this is so important. So when you look at something like cryptocurrencies, you're looking at an asset class that inherently has a volatility of 80+%. I don't know how many people in here have experienced asset classes with 80+% volatility, but that is very high. In fact, how many people in here are currently involved or have any allocation in any crypto at all? Maybe even an ETF, maybe even just own a blockchain ETF, or GBTC. Type in me at me if you have ever any trading or investing in the crypto markets. And again, it doesn't have to be a cryptocurrency. It could be a blockchain stock or an ETF even. I'm just kind of curious. Okay, so that's perfect. So we're seeing some people, and some people are saying they're thinking about it, which is perfect. So again, one of the main problems that people are having with crypto is that it is so volatile. And that's exactly where a lot of the problems lie for people. So when we look at crypto, there are two dynamics that we must understand. Number one, as I said, volatility. Crypto assets have, depending on the asset itself, what it is, has an 80+% volatility. And the other thing is trend. Unless you are able to determine what the primary trend is for the specific asset, then actually, quote unquote, timing it, tactical trading opportunities are, in my opinion, in my experience, nigh impossible, almost impossible. So another way of looking at this is that volatility essentially means that we must have perspective. Unless we have perspective on the asset in question, meaning the trend, we really have no business trading it. And that is especially true for something like crypto and anything that has a volatility of probably 50+%. In this case, crypto 80+%. And then also trend, right? Equally, maybe even more important, unless we understand the trend, we are basically in a situation where it's pretty much impossible to be patient. And so volatility and trend are unbelievably important. And again, crypto assets, cryptocurrencies, blockchain, these are new asset classes. When I say new, we're talking about, depending on how you measure it, 7, 8, 9, 10 years of history, which given the market's history is really not that much. But we're doing a lot of research, and we're able to apply a lot of stuff that we are using with sort of traditional asset classes, equities, fixed income, currencies, and all the derivatives thereof. And we can actually apply a myriad of them to the crypto markets, particularly as it's been becoming more institutionally adapted. So crypto is something that is moving very fast in terms of its innovation, its adaptation cycle. I'll talk about that more in a second. But let's quickly look at the markets and understand crypto in terms of where we are right now and how we got here. And my hope is that if you've never looked at crypto, or if you're a total disbeliever, that some of the charts I'm about to show you are going to give you some perspective. I'm not here to take anyone and convince anyone to take you to crypto world. Again, to us, it's just part of an asset allocation model. It's not everything we do. In fact, it's a small part of what we do, but we do it actively and with a serious allocation on it. But let's have a look at where we are, and more importantly, maybe how we got here and where we're going. So again, the crypto adoption cycle is unbelievably quick. I'm actually in talk right now to visit the Cardano Foundation at some point over the next few weeks. Cardano, if you guys are following cryptocurrencies, one of the currencies that I was tokens, I should say, that was developed by some of the very prominent people. In this case, it was one of the co-founders of Ethereum, Ethereum being the network. So we're watching this very closely, and we're doing a lot of ground up research. So that's one thing that we are seeing, is that the adoption cycle is very, very fast. What does that really mean? What that means is that the adoption and the innovation of it all is unbelievable. If you recently you could follow something like NFTs. It's essentially this tokenization of our social lives, right? Of us. Non-fungible tokens is what it stands for, NFT. And there's a lot of stuff out there in NFT land that's not going to work, in my opinion, but some of it is really going to work. But the way it's moving, the number of new innovations and websites that are coming online every month on this stuff is really unbelievable. So it's moving very quickly, and that is partially what explains the volatility around it. But if you look at some of the long-term charts, and this is just going to be more of a charting look at it than more fundamental stuff for a minute. And when I say fundamental, I mean more like the growth sort of measurements of it all. But this is what's called a logarithmic chart of Bitcoin, and it's a multi-year chart. You can see it stretches back all the way back to 2012. And you can see that if you look at a logarithmic chart, you're looking at an asset that is moving in waves, but more importantly, it's moving in waves that have serious consolidation patterns along the way. And these consolidation patterns are really, really important. So you can see, for example, from late 2013 all the way to mid 2017, we had a huge and long and very frustrating, what the crypto community calls a crypto winter, Bitcoin winter. And then we, of course, had a big rally up to 22 grand or something. And then it all, quote unquote, fell apart, crypto back down to, well, I don't know what the low was, 3,000 or something like that. And now we're breaking out again out of this latest, quote unquote, crypto winter. So from a long-term, simply from a charting perspective, Bitcoin, a logarithmic chart, very interesting. Let's look at another chart. And I would really encourage you guys, if you're interested in this at all, have a look at this chart, maybe even take a picture of it with your phone or whatever you got in your hand, or maybe even a regular screenshot, and maybe go back and study these charts a little bit. What about Bitcoin versus the S&P 500? So now we're looking at a new asset class and we're comparing it versus the S&P 500. What we're looking at is a chart where Bitcoin in late, not late, but in the autumn of last year started to break out above its recent high versus the S&P 500. Then it pulled back here over the past few months, and now it looks like it's starting to give us relative strength again. So this is nothing more than a relative chart, and I know a lot of people don't even use this, but I would urge you to do something like this, comparing Bitcoin versus the S&P. And then we're looking at another chart here. This is Bitcoin in 2012 to 2013, which is the blue line, and you overlay that to where Bitcoin more or less is now. And you can see that if history is any guidance, and this is only looking at one point in history, right? But if the 2012 to 2013 market was any similar to what we're seeing now in terms of trajectory, then it looks like Bitcoin could soon start to have a serious move back to the upside and back to making a lot of new all-time highs. That's Bitcoin. Let's have a look at another one, Ethereum. Ethereum is actually the network, really I should call it Ether. That's the coin that it is. Smart contracts, again, if this is a whole new world to you, I would really encourage you to go back, do some research. I would encourage anyone to do 40 to 100 hours of research to understand this stuff from a fundamental perspective. Looking at charts, of course, that goes much quicker. Ethereum, you're looking at a longer term chart of Ethereum. Again, longer term is all relative, but you're looking at this chart and you can see Ethereum, Ether, breaking out again, not surprisingly, actually in this case, early this year, pulled back, and now it looks like it wants to go back higher. So this is the Ether chart. And then I'm going to give you one more, and then we're going to start looking at how to actually do this all. This is Cardano. I mentioned this a minute ago. I'm actually, like I said, in the process of trying to meet these guys in the not too distant future. You can see this is a more or less a brand new token, if you will. Consolidation phase there late last year, or in the second half of last year, big rally and consolidation, and now we're actually on a potentially another leg to the upside. So this is just a technical chart. So again, what I mentioned before is, in my opinion, the most important two things that must be understood when trying to not only just trade crypto, but also from an asset allocation perspective. Volatility, again, so we must have perspective. Trend means we must have patience. Really, really important. Now, obviously, eventually, whenever this crypto world starts to I hate to use even the word, but when it does start to mature, at some point, growth is going to slow and normalize a little bit. That's normal for any asset class. And then that means volatility will come down. But for right now, we're looking at asset classes, or an asset class that has, if you look at Bitcoin, a volatility of 80%. And if you can't contextualize that, think of almost the craziest stock you've ever seen, for the most part, and that's roughly what the volatility, in terms of volatility, and that's roughly what Bitcoin is giving us on sort of an average month, average quarter. So let's look at tactical and trending opportunities in crypto. But we must understand the trend. unless we understand the trend, and particularly with something crypto, it's, in my opinion, like I said before, basically impossible to do anything tactical. Is the crypto or the asset trending at all? Is it trending higher or lower, right? Really, really important. So the timing of the trade really is a question of, how do I find trading opportunities in the top cryptos, but how do I do that in assets that are actually trending? So the first thing we must look at is volatility. Let's talk about volatility and how we can master volatility to our benefit, because volatility is the #1 problem that is causing people to A, shy away from crypto, and B, having really bad experiences. And volatility is something that causes what we call the rule of 80-20. The rule of 80-20 is very simple for people at home, for investors and traders. It means the 80-20 rule basically means that you lose 80% of your profits in 20% of the trades that you do. You lose 80% of your money, of your profits, in 20%. How many people have ever noticed that you tend to do very well, and then all of a sudden you have 1 or 2 bad trades and you're right back where you started from? And that's particularly true for more volatile assets such as crypto. Again, this is what we call the 80-20 in trading. So for a lot of people, it looks something like this, and you can add a couple of zeros to these numbers. I'm just giving you, a simple idea. So you make some money in trade 1, make some more money in trade 2 and trade 3, and now all of a sudden, you're up $1,200 you're up $1,843, 100% win rate after 4 trades. But now on your 5th trade, you lose $1,400, almost $1,500. And after 5 trades, you've gone from just 1 trade earlier being up $1,800, now only up being $368, right? How many people have ever done that kind of thing? So that is the real issue that we're finding, and it all has to do with volatility. So we're going to show you right now how we can help you use a pattern to essentially cure being a losing statistic. So this is a very repeatable process and a pattern that works in bullish and bearish trends as well. And it really allows us to visually depict investor emotions. Again, this is the volatility aspect of it all. We're going to talk about the trending aspect in just a few minutes. Now, one of the things that we can use to spot volatility opportunities is to understand what is investor sentiment, and it works beautifully in crypto, just as beautifully as it does in equity and other markets. Let's have a look at this. So what we're going to look at here is a pattern that we are in a minute going to combine with the trend that is going to allow us to find beautiful tactical opportunities in crypto land and other asset classes, of course, as well. What we're looking at here is from a purely simplistic from a pattern perspective. We're looking at what's called a hammer candle with a follow-through buying. But we're not really focusing on the candle stuff here. What we're focusing on here is the investor emotions, or really what we're looking at is the algorithms that we are looking to jump on the back of. In the crypto world, as in any other asset class, there are lots of what I call smart money algorithms that are out there to maybe not necessarily purposely take your money, but basically go against what almost everyone is doing. And it all has to do with finding a straightforward, repeatable pattern on the chart. So let's look at this first. We're looking at this hammer candle followed by the follow-through buying candle, and he said that see the big pop to the upside. Let's look at a few more of these examples here in just traditional asset classes, and then we are going to apply this to crypto so you guys can see how this works. Again, this is the volatility aspect of it all. You can see we have a downtrend in this particular asset. Then we have this hammer candle that appears, and then we have this follow-through buying candle. And I'll explain here right now what's happening here and why this leads to such big rallies many times. What we're seeing here is a downtrend in an asset. This happens to be Apple stock. And just as almost all of us retail investors and many institutional investors are no longer interested in the stock, or are maybe even short it or have sold it, they're starting to come in. They're starting to sniff out that people are not allocated to the trade. So what they do is they come in, they start buying. They start buying on this day, and if they really need it, they start buying on the next day. And that's what leads to these huge squeezes to the upside. They can just be, they can be short covering rallies. They can be looked at as just then forcing other algorithms to get on board. How many people have ever been in a trade where just when you got in, that's exactly when the market started to go against you, right? And I can tell you there's a really high probability that is this type of algorithm that is causing you to lose your money. They're not doing this to gun against you personally. They're doing this because most people do the same thing all at once. And so that's a problem. So this is Apple, but look at, for example, in Bitcoin, just a few days ago, the same exact pattern happened. If you would have bought based on this pattern, you could have bought Bitcoin around 4,300. It's now currently closer to 4,800 plus, right? So that's just a few days ago. That's like $500 right there sorry, $5,000 in just a few days. Same exact pattern in Bitcoin. But let's look at the pattern a bit more. I want you guys to get to the point here in the next few minutes where you can literally repeat this pattern in your sleep. Hammer candle, again, this is where the algorithms are starting to sniff out that everyone's short, disinterested, or sold the stock, right? And that's why they come in, they start buying, they start basically taking your money. The very next day they come in with follow through buying, and boom, it's off to the races over the ensuing days, weeks, and a lot of times even multiple months. Let's have a look at another one. How about this one here? Here we're looking at gold, the GLD. Actually, let's quickly go back here. I want to check at something that I skipped over here accidentally. Let's look at the pattern a bit more closely. What we're looking at here is the same pattern I just showed you, but just very close up, the hammer candle and the significant follow through buying. And the importance of the follow through buying is that unless this happens, the algorithms down here, we're really just testing the market. But when they come through and they really mean it, not only are they starting to take your money and squeeze you, they're also starting to get other algorithms to start chasing the market higher along with them. So now you have a lot of, again, quote unquote, smart money algorithms and even smart money portfolio managers starting to jump on the same trade very quickly and basically leaving a lot of retail investors as sort of, pounding dust. Let's look at another move here. Downtrend hammer candle, follow through buying, off to the races, right? Same pattern, different asset. How about here an ETF? Downtrend, you guys can see the hammer candle right there, and then you can see the follow through, and then of course it's off to the races. Same pattern, same principle in terms of investor psychology and why it works. And again, it works exactly the same in crypto, except that in crypto it's even more pronounced because of the volatility. Here's another ETF. Downtrend, you guys can see the hammer, right? Follow through buying and off to the races. Again, same pattern, different asset. So the more volatile the asset is, the more important and relevant this pattern is or becomes. Are you guys following me so far? Give me a quick yes if you follow me so far. The more volatile the asset, i.e. crypto with an 80% volatility, the more prevalent this kind of pattern becomes. The more important or relevant this pattern is for your involvement in the markets. Let's look at another one. Here's a downtrend, here's a hammer candle, and then there's the follow through buying. But notice the follow through buying only happened 2 days after that initial hammer candle, i.e. when the algos started to step into the market, right? We didn't get the immediate follow through. And even though you would have still made money on this trade, it is what we call a failed reversal because ultimately it stopped going higher even after just a few days, right? So the follow through buying in our experience has to be on the very next day. And it doesn't matter whether this is crypto or other asset classes. It's really important. Let's look at another failed reversal. Look what happens here. Downtrend, and then we get a follow through, right? But we don't get it until the day after, so until 2 days, I should say. Again, could have made money, certainly wouldn't have lost much, you probably would have lost anything, but it didn't really continue in a meaningful way. But what if the follow through buying happens right away? Look at this here. Look at the hammer candle. What a beauty. Look at the follow through. And this is what's in crypto. It's one of the beauties about crypto. When you do get this pattern setting up, and it happens all the time, it is really, really pronounced because of the volatility that these assets are giving us. But one question that some of you guys might be asking is, hey, Serge, this is nice, but where do you set your stops? Like, how do you actually do this if a trade goes against you? And yes, this isn't going to work 100% of the time. This works about 75 to 80% of the time. Well, if the hammer candle, the bottom of the hammer candle that I showed you, where the algorithms initially came in to test the market, if this is the point of reference for them for buying, what do you guys think the algorithms are going to do when the market starts dropping below that point? Anyone have any guesses? Let us know in the chat box. If this is the reference point for algos to start buying or at least testing the market, what happens to the algos when you start breaking below this point? Any ideas? Right, exactly. The algos are either going to short the market or they're at least going to stop you out and stop themselves out of the long position, right? That's the very simple basic formula. Now, for us, that means that there is an absolute indisputable last resort stop loss right here at the bottom. It's as simple as that. Now, you don't have to wait that long. You can get out earlier if it goes against you, but this is a very clear, no questions asked area where you simply close out of positions. Make sense? It's very straightforward, right? So again, let's look at one more example. Here's the downtrend. You can see the hammer, the follow through buying, and in this case, you can see obviously the assets started to move higher over time, but any break below this point would have been the absolute last resort stop loss. Again, you don't have to wait that long, but it's nice to know that there is a very logical, obvious level where you need to get out, because that's also where the algos will at last resort start getting out. Now, as I've been alluding to, this pattern absolutely works in investing timeframes. It works in what we call the position trading or swing trading timeframes. And it also works for those of you guys that are more proactive in the day trading timeframes. And it works because algorithms are active in all those timeframes as well. And then also, as I've been alluding to, not only does this pattern work in crypto, it most definitely works in equities, it works in ETFs, it works in options, and it works in futures. So let's have a look at a few examples, and I'm going to go through the current market right now as it is right now as well. Crypto markets are actually open today on a Saturday. So let's have a look at some of this. I'm going to go through a couple of historical examples so you guys can see the pattern. You can see it here. This is a weekly chart of Bitcoin. We had a beautiful buy signal with Bitcoin based on that pattern in early February, and then the Bitcoin started rallying from the high 30,000s up to 60,000. Here's a daily chart. Look at this. Same pattern. Crypto started to move from 3,200 up to 4,200. That's a $10,000 move, right? Same exact pattern. Here's a stock, just to give you, just kind of throw in another asset class. Same pattern, same result, right? Exhaustion, selling, the algorithms come in, fall through buying, and boom, we move to the upside. How about here? Here's a 15-minute chart of Bitcoin. Anyone here, if anyone here is really quick and you want to be a day trader of crypto, which I'm not necessarily encouraging, but if maybe some of you guys are, here's a 15-minute chart of Bitcoin. Look at this, same pattern, fall through buying the very next candle, and Bitcoin moves from 44,000-ish up to 45,000-ish very quickly, right? So same pattern, different asset. How about here, a 5-minute chart on an ETF? Look at this, the market gaps down, same pattern, seller exhaustion, algorithms come in and start testing the market, algorithms confirm it by buying big and bringing other algorithms on board that are chasing this, and boom, a big move back to the upside. So this is a very repeatable pattern that allows us to handicap the volatility part of assets, meaning giving us tactical opportunities. And there are a lot of people already using this pattern. You can see this guy here made 9% in just 30 minutes. He was more of a day trader. This guy made $800 in 6 minutes. This guy made 40% on UAL, and so on and so forth. So we've talked about volatility, but what we really need to talk about now is trend. Because without trend, particularly for crypto, it is, as I said, just about impossible to actually do anything on the volatility side, meaning doing any trading. You must understand trend, particularly for crypto, because of the high volatility. So let's talk about trend. Let's talk about the importance of trend, and more importantly, how we can tell, and I'll show you our tool that we use, what the trend is, what actually is the trend. Because it is confusing with an 80% volatility what a trend actually is. So we're going to show you right now my process for unpacking what I call that cure to the 80-20 trap. So first of all, we need to understand that the trend is your friend. And it doesn't matter whether you're looking at equities, it doesn't matter whether you're looking at futures of any type, it doesn't matter whether you're looking at currencies, it doesn't matter whether you're looking at equities or cryptos. The trend is your friend. But what the problem people have is mismatching the trend with their swing trade or with their tactical opportunity. How many people agree with that? Give me a quick yes if you've struggled with that before, right? So determining the trend is the first and most important thing we must do. And only then do we go in and find buy or sell signals within that primary trend. Only then does it make sense for us to start looking for that pattern that we just showed you, which gets us back to the very first chart that I showed you here about 30 minutes ago, okay? We're looking for the primary trends. And by looking at this chart, you can see this chart has very clear areas with a green background and very clean areas where it has a red background. These are the primary trends. In this case, this is the chart of Ethereum, by the way. We're going to go into the live market here in just a minute. We have a tool that allows us to tell us exactly when the trends are bullish or starting to be bullish and when the trend is bearish. And on top of that, the tool allows us to give us only buying opportunities when those tactical patterns I just showed you, when the background is green, and only selling opportunities when the trend is bearish or where we're in the red zone. Make sense? Yeah? So we're going to walk you guys through this right now. So let's have a look at the crypto markets and others. But one of the major things that makes it so difficult for people in crypto world to determine trend is, yes, volatility, but there is really very little sector and group sort of divisions we can do. So the stock market, a lot of people know you can use sector charts to determine trends, right? You can look at an ETF that represents a stock sector. But with cryptos, yes, there's some ways of dissecting things, but we don't really have sectors. It's much more difficult. So what do you do? Well, that's exactly why we are using what's called our market rover. So without any further ado, let me move on straight over to the market rover, and let's start walking through this process of how we are able to find trends, and then within those trends, find us tactical opportunities with exactly that pattern that I showed you a few minutes ago. So I'm just going to go through some of the top cryptocurrencies. I'm happy to look at other ones if you guys want as well. Go ahead and give me some ticker symbols in crypto world and later on also in equities, and I'll show you exactly how this works. So let's start off with the one we just talked about before, just because I see some people already typing this one in, and that one is called Cardano. ADA is actually technically the currency. It's Cardano is the network, so it's ADA is the token or the And you can see, I'm going to make this chart larger in a minute, that we just a few days ago in this point got a beautiful buying opportunity as Cardano once again started going into a bullish trend. You guys can see right there on July 28th, Cardano was trading at about $1.30. It's now trading at $2.50 or so. I think this data is still from yesterday, so don't, it may be a different price right now, right? And you can see that it's only giving us buying opportunities once we're in a bullish trend. Let's go back a little bit further. Look at back here. This was in November 2020. Cardano started going into a bullish trend. You see how there was the black background? That's a neutral background. We do not do any trades when there's no trend. So we had buying opportunity 1, 2, 3, 4, 5, all tactical buying opportunities. If you just want to be an asset allocator and all you want to do is say, hey, I'm going to start buying the currency, the cryptocurrency, once we start entering a green phase. Hey, imagine if you bought Cardano here at, what is it, 15 cents? And even if you held it all the way to the end of this, you still would have sold it at $1.16. If you bought it the other day when we went to the green zone, which was like the Cardano was closer to $1.15, $1.20, it's now, I said, $2.50, right? So this is the time frame. These are daily time frames. This is a daily chart. Each bar, look at the bottom, guys. Look at the time frame at the bottom. We are using this for what's called swing trading. But again, the importance here is the duration of the trend. If you can determine the trend, and that's what our algorithm does, you can then do tactical opportunities using the process that I just showed you before. If you can't determine trend, you have no business with an 80% volatility instrument like cryptos to start doing trades. Let's look at another few asset class, another few assets. I'm going to get back out of the full screen. Let's look at some of the major ones like Ether. Okay, ETH, Ethereum is the network. Ether, ETH is the actual coin. So let's go back a little bit in time first, so you guys can see what happens. Right? Look at this. We started going back into a bullish trend in April of this year. Since then, Ethereum went from 174 bucks. It went all the way up to 4,200. And it gave us all sorts of tactical buying opportunities all along. How about just recently? Look at this. It went back into a bullish trend on July 22nd. On July 26th, we started getting our first buying signal on a tactical side. It has since then moved from 2,350 up to 3,265 or something like that. Who thinks this is a reasonable thing to do, understanding trend and then actually getting opportunities? How about let's go out really far on the risk spectrum. Let's go with Dogecoin. And I understand that I'm not here by any means endorsing Dogecoin, but let's see if it actually works on Doge. Let's have a look. All right. So first of all, Dogecoin went into a bullish trend back in December 2020. You can see that because that's when the green background started to appear. At that point, Dogecoin was trading at basically a penny. It went up all the way to 70 cents. We just recently, just a few weeks ago, Dogecoin went back into a bullish trend on July 20th. We got a buying opportunity, a tactical one at 21 cents. So far now it's in the mid 30s. Dogecoin. And if you guys want me to look at some tickers like stocks and indices, please let me know because I'm about to walk you through some of those things as well. How about, okay, Stefan, let's look at BNB. It's Binance, it's the Binance coin. Let's have a look at this one for you, Stefan. All right, let's make the chart large and let's look at what happened. The last tactical buying opportunities we just got was on July 29th when Binance coin was at 325. It is now in the mid 400s, excuse me. And you see it just went into a bullish trend. So if you want to be tactical in terms of your trading, all you do is you take these signals, right? But if you want to be an allocator from a trending perspective, all you do is you buy when we go into a green zone. And at that point, you either use a trailing stop, which is what we do, right? So if you would have used a trailing stop, you would have bought here at some point at 25, 26 bucks, and you would have sold around 570. Starting to make sense? Yeah? Perfect. Okay, now let me move along a little bit quicker. I want to show you guys how this also works in things like some of the equities, right? So let's look at, since we're talking about Bitcoin and stuff, let's look at some of the Bitcoin related equities. MSTR is one that comes to mind. MicroStrategy, why? It's a company that happens to own a lot of Bitcoin on their balance sheet. So look at this. We got a tap on October 20th of last year, or excuse me, early October last year, MicroStrategy went into a bullish trend based on our algorithm. It then went from 160 up to 1,300 bucks. We just recently, just a few weeks ago, started MicroStrategy once again going into a bullish trend. We then got a buy signal and it started to rally. You guys see this? How about Square? Yes, that's a good one. That's another one. Let's have a look at SQ. That's another crypto-related asset. And we can do the same thing on bearish trend. Absolutely. You can do the same exact thing on bearish trend. Exactly. We're looking at the daily time frames here, right? Let's be very clear. These are the daily time frames. Okay. How about another one here? Square. It just went into a bullish trend on May 24th. We've had 2 tactical buying opportunities since, right? But again, if you just wanted to buy it from a trending perspective, you bought here and you would still own it right now. How about PayPal? That's another one. Okay, PayPal, let's see what PayPal did. Okay, PayPal, let's see, it went into a bullish trend. April of last year. So since then, if you would have bought then, it's 113 then. It's now in the high 200s. And along the way, you can see beautiful tactical buying opportunities. How about Apple? Sure, let's expand our horizon a little bit and let's just look at random stocks. Apple, some of the big ones. Apple, sure. Here's Apple. You can see most recently, Apple went back into a new bullish trend in early June. We then get our first tactical buying opportunity on June 11th. And the stock since has gone from 125 up to 150. You guys see that? Perfect. All right. Oh, I just got rid of the chat box, so I can no longer see your questions. Here we go. Sorry, I need to go back to this here. Okay, great. Okay, I know I need to move along here. Okay. How about Pfizer? Sure. All right, we'll look at Pfizer. The last signal was 29 days ago on Pfizer. And you can see here, went to, well, let's have a look at the trend first, right? That's our process. We went to a bullish trend on March 25th. We then had you could have just bought it then from a trending perspective, but if you want to do a trade, bought on the 12th of July, it has since gone from 39 up to 48. How many people like this? How about a brand new one? Sure, let's look at some new ones. How about here, Lowe's? This just hit the other day, LOW. We just got a buy signal on Friday on this. Just got a buy signal, right? We don't hold stuff through earnings, by the way, so you would have never done this one here, for example, right? Well, let's look at whatever CHD is. This one's choppy. You wouldn't trade this because there's no real trend. So when there's no trend, we don't trade it, right? We don't trade it when there's no trend. How about NVIDIA? We just got a buy signal in NVIDIA just on Friday, just yesterday. Okay, look at this. It went into a bullish trend on March 25th. Buy signal here. Another buy signal here before earnings. We wouldn't hold the earnings, and we just got another one here. You guys see this? Perfect. Yes, great. Now, when you look at something like stocks or other asset classes that you can actually have, how should I say it? We can actually have a benchmark against things. You are able to actually benchmark against, say, a sector, right? So in this case, you look at Alibaba, you can see you get a buy signal from the market rover, and because the ETF that it's related to is also giving you a buy signal at the same time, right? So you trade the trend, but with cryptos, it's more difficult. That's why this is such a great tool for people that want to use crypto, and of course any asset class, but particularly for people who can't use traditional analysis. This is a great tool to use and give us the entry points and exit points, but it gives you profit targets 1 and 2. Look at your Bank of America. We got buy signals from the market rover, and look what the underlying ETF, the XLF, was doing, also trending higher and giving us the buy signal. And you can, if you use equities, by the way, for the signals, you can see in this particular case in Constellation Brands we had a 25% profit. But if you wanted to use options and just lever that bet, that would have translated into like a 500% plus profit on that same trade. Or here we got one in BBT, 10% in the stock based upon the market rover signal. And by the way, we also get sell signals. I just showed you the buy signals today, just to keep it simple. Would have resulted in more like a 345% profit with options. So again, the great thing is when you do these trades, it's very well documented. We have the trade based on the trend, and then we get the actual tactical trade based upon the algorithm that our indicator that sniffs out what the algorithms are doing. So this is really, really important to understand, and this is how we are able to essentially time and remain in the trends of major asset classes around the globe, but also very much so in crypto land. And you can see what some of the people are saying that are using this tool in this process. This guy bought some puts and he made a $5,000 profit. This guy bought some HCA, $1,660. John has really started to implement the market rover and finds it really easy to find the trades. Mark wrote to us saying that he's finding that between 50, 60, and even 100% returns in as little than a week, and of course using options in his particular case. This guy did a trade on TLT and reached his 50% goal very quick, a few $100 on that one. This guy wrote to us, and this is not a typical testimonial, but I just wanted to share it to you to see I guess it is possible. Well, I know it's possible. This guy made $22,000 the following day after implementing the market rover process. So really cool to see that. You can see Gary wrote to us, best guidance he's ever seen after 30 years in the markets. SMH for Kevin made the $3,700, and this guy has seen his account grow 10% very quickly thanks to the process. So the trades that we are getting from the market rover and from the process are qualified trades that produce on average between 70 and 85% trades. And the reason for that is that we're basing it not only on an algorithm to find us the actual trades that allow you to trade basically with the wind of the Wall Street algorithms at your back, but also because we are having a proprietary tool that allows us to measure the main trends. And we actually, believe it or not, send out some of our favorite trades from the market rover process every single week. In fact, about 4 to 5 per week we send out, and we actually manage it in a portfolio each time we open a trade and we close them. So if you're saying, Serge, this is nice, but you know what? I'm too lazy to use a tool. I just want you to send me your best trades based on the tool. Hey, we got you covered. We're up 100% year to date on those trades right now based on return on capital. Just year to date in this year alone. Last year we were up 125% for the year. We're up. This chart is a few weeks old. We're up I think like 98-99% right now for the year on the swing trades. Those are the swing trades. So by now, I want to ask you if you found this helpful. Do you think today was time well spent on a Saturday? And again, showing a lot of commitment of everyone to show up here on a Saturday. Congratulations. Do you think you can use what you've learned here today, the process, the tool, to grow your portfolio and provide you and your family maybe with a better quality of life, to dabble in cryptocurrencies or just in equities, ETFs, and other asset classes that we have on the market rover? And do you want to get bigger results? And would it be okay if I showed you a way to go even deeper to get bigger results even faster? So you have essentially 2 choices. Here's the thing. You have 2 choices right now. Your first choice is to sit on the sideline, and several months from now, you look at your trading account balance and say, you know, this is one of those choices on my list of regrettable choices that I look back on kind of kicking myself if I only had. If I only had purchased stock in Amazon, if I only bought Apple when I had a chance, if I only had asked that one girl that got away out to dinner, if I only had trusted my gut and took action. And you can take what you've already learned here today and leave here with the intent of trying to figure this out by yourself. Or you can be the other person and make a choice to take action. You can be the other person who in life just seems like they're always getting lucky. It's the other person who just appears to always be in the right place at the right time. It's that other person that seems like life is just too easy for them. The other person who you secretly wish you could be a little bit more like. You know that person. It's the one who did buy Amazon stock before it rallied. It's the one who did buy Apple before the iPad and the iPhone. It's the person who always seems to get picked for promotions over everybody else. And it's the person who probably did ask the girl out to dinner. It's the person who knows what they want and goes after it because they're not afraid. So you see, these trading opportunities are in the markets are going to happen with or without you. And there's a good chance that traders like yourself will take record-breaking profits from this market opportunity with or without you. The choice is really yours. And I decided that today it would be unfair for me not to give at least the action takers today, which you see yourself as one of, the opportunity for us to work together and use the market rover. And so what you're about to discover here is you're going to find how we're able to take these opportunities for huge profit potential using our market rover in the process and turning this opportunity into a true windfall profit, where to take high profit potential gains from a very repeatable process. And again, you can see what some of the people are saying here. Barry Henson made 30.7% in Moderna. That stock has been going vertical as of late. Ray, he's up 25% in his portfolio so far with CCI. FedEx, Dangdome at 28%. Alan wrote to us that his ULL trade filled automatically for a 35% gain, all thanks to the process of the market rover. So with the market rover, it comes bundled with what we call the trade of the day. Every single day of the week, we send out a trade alert based on the process and signals from the market rover. We send them out in real time on stocks, ETFs, and options, and they are managed. So we send you an alert in the morning, and we send you one when we close it, usually a few weeks to a couple of weeks later. So it's fully managed. That is a value of $1,997. And you can see what some of the people are doing here. Monty took a trade at 34% gain in a month. David took Lennar, made a 37% profit. This gentleman, Rob, made a profit of $2,180 in SLV, all based on the process. But the real-time trade alerts also come bundled right now for the first 50 people for a full 90-day access to my entire personal Inner Circle members area. The Inner Circle members area is filled with goodies, including a portfolio, 2 portfolios where we also do investments. So not only do you get access to the full trade of the day service, you also get 2 portfolios, one of them with stocks and one of them purely with ETFs that has investment ideas, all based on the process, the trend process based on the market rover. So that's also included, and that is another value of $591. The first 50 people also get access to our chat room. We have a chat room that's open most of the day, where we do active day trading in the morning session. That's open and there for $997. We're looking at a total value now of $3,585. The chat room is a live community. We focus on the open gap trade based on the pattern I just showed you before, between 9 and 12 Eastern, but the chat room is pretty much open all day, and we're in there focusing and helping traders be on the proactive side. So all of this together leaves you with another value of $797, and that is access to our weekly Inner Circle member webinars, where we go through all of our trades, our process. We go through all the market rover signals. We teach you how to use the market rover that we focus on so much today. You're looking at a total value of $4,382. So the question is, are you committed to taking action? Do you see the benefit that this could provide your trading life, your life in general, and how the ease of use of the market rover can help you time and trend not only stocks and equities, but also the crypto markets? Remember, it's super simple to use, and we just went through the process today to use all this. So the first 50 people are going to get access to not only our Inner Circle area and the day trading chat room and the Inner Circle member sessions, but also, of course, the actual market rover. We've shown you here today how the market rover works, how it works in all the asset classes, and that is another value of $1,997. So we're looking at a total value here of $6,379. Again, the market rover gives you a trend. We're in a bullish trend when the background is green, and then the market rover is only going to give you buying opportunities. It's not going to give you sell opportunities when we're in a bullish trend, but it's only going to give you sell opportunities when we're in a bearish trend. It gives you clear buy signals with profit targets 1 and 2 and a trailing stop. And in all of that, on top of that, it gives you a scanner that allows you and tells you every day the new signals, and you can go back and see which any asset we have in here. We have stocks, we have ETFs, we have currency, we have cryptocurrencies, and we've even gotten it broken down into different, like if you want to break down equities into financial stocks or consumer discretionary, and so on and so forth. So all of that is here embedded in the market rover. But again, all of this is being hand delivered to you. You do not have to worry about even using the market rover on an extensive basis if you don't want to, because we send you our best trades every single day. But right now, today, we are not going to charge you $6,379. What we're going to do is, I was haggling for a big discount today with our team, and I managed to, on top of the $700 VIP credit, also apply another $1,000 credit to get you 3 full months access for only $297 to the full trade of the day, inner circle, members area, everything I mentioned, including, of course, access to the full unrestricted access to the market rover. And all of this can be accessed right now if you get started. If you go to studytradersecrets.com/crypto, and I'm going to quickly type this into the chat box. And again, I'm happy to take any questions and address them quickly before we pass it back to Jeanette. It's www.studytradersecrets.com/crypto. All right. So it's only $279 right now. That's a full 3 months access to the market rover. And after the 3 months, you are going to be made a really, really good offer to continue on an annual basis and pay the difference, or it's $147 after that. So again, this is a full unrestricted access for $297 for the first 3 months. And imagine this: what if you only had one profitable trade, one really nice trade using the market rover? Would that pay for the $297 in 3 months? Every single day, the market rover gives us brand new signals. Every single day, we send you one actionable idea straight to your inbox, and also, again, manage that trade. So when we close it, you get another email. All of that is included with this package here, and it's only $297. Mike is asking, when does the market rover update? The market rover updates at the end of the day. So the signals we get are based on end of day data. That's why it is so good to use for swing trading, and that's why it's so good at giving us trends, right? The trends can last anywhere from a few weeks to multiple years. Usually they last at least a few months. And then the trades are based on the smart money algorithm that we are running, that takes advantage of the Wall Street algorithms that are causing so many people problems, so allowing us to jump on the back of the smart money algorithm. Is the trade of the day based on equities? Yes, it's based on equities or ETFs. And if you're an options trader, by the way, what we do is we give you an options trade along with the trade of the day email every single day, right? Every single day, you are going to get access to the trade of the day, which is going to give you a clear-cut ETF and stock idea every day. And on top of that, it's going to give you an options idea. So if you're the kind of person, like I said, like to do options, then take the options trade, right? And again, you get full unrestricted access for just $297. That includes, of course, full access to the market rover. The algorithm, yes. So what we do in the member webinars, Sid, what we do is we give you crypto trades. Remember, there is a defined universe of cryptos, so we want to be very qualified. We want to be very qualified with the trades we give you in cryptos. We do give you trades in the weekly members area, and we usually do like a special webinar in addition to that once a month. We really focus on crypto as well. But again, you get, every time a new trade idea fires on crypto, you will see it inside the market rover. So the trade of the day focuses on, as it says here, stocks and ETFs and options. All you have to do to get a new crypto idea is go into the market rover. Let me show you how it works. You literally go, here's how it works. You see up here how it says you can click all asset classes. Let's only click on crypto, okay? then what it's going to do, it's going to only give you the cryptos. We have 70 cryptos in here. And then you see when the last signal came. The last signal we had was on Theta Fuel buy signal 5 days ago. That's a bullish idea. We had a bunch of bearish ideas, but they haven't been along for a while. So mostly it's been bullish ideas. Look at this. Look at how we told us all to buy all these assets. Doge and BNB and ADA, all these things about 2 to 3 weeks ago, right? So every time there's a new one, every single day, what I do is I go in here, I just quickly check on crypto if there's a new one, and I check the signal. As simple as that. Does that make sense? SteadyTraderSecrets.com/crypto. It should be working. I see a lot of orders coming through.
Yep, I just tested it when I saw that, Serge, and it's loading up for me. So maybe they put, maybe let me look at the chat box and see if you, because I see orders coming in through as well. So yeah, guys, the link's working. It's working right now. I see orders coming through. So maybe check a different, when Serge posted it, he did too many dubs. One too many dubs. So I just
I did.
I just reposted in the chat box, so it's an actual hyperlink. I guess everybody that is ordering right now is taking one of those W's out, but I fixed it in the chat box for y'all, so it should be good.
Yep. William is asking about phone number. What we do, William, we do an onboarding phone call. So when you come on board, you can get either on the phone with me personally or a couple of the employees, and we will do a personal onboarding phone call. And that goes for anyone of the first 50 people, of course, that join in and take advantage of the $297 for 3 months. Perfect. Yeah, I had a W too many. Apologies for that. Excellent. All right. Well, listen, Jeanette, thank you for the opportunity. Thank you all for taking time on a Saturday. I hope this was helpful, and looking forward to having everyone joining here and taking advantage of what the algorithm and the whole process has to offer for us over the next few months, which I think should be very interesting in the markets.